All right, so good afternoon, everyone. My name is Eriko Seki from the Ministry of Economy, Trade and Industry, and we are very happy to see everyone here to join us for the seminar, The Role of Sovereign Bonds in Expanding GX Finance. This seminar will spotlight the newest efforts by the Japanese government on promoting transition finance, which is the issuance of our own sovereign bonds, the Japan Climate Transition Bonds. So first, to start the seminar, I would like to welcome Mr. Yoshida Nobuhiro, Parliamentary Vice Minister of Economy, Trade and Industry, to give the opening remarks. Mr. Yoshida, you have the floor.
Good afternoon. I am Nobuhiro Yoshida, Parliamentary Vice Minister of Economy, Trade and Industry. I am happy to hold this seminar on the GX economy transition bonds to be issued this fiscal year here at the COP28. Climate change is a global issue. Japan aims to realize its international commitment to become carbon neutral by 2050 while building industrial competitiveness and economic growth. We aim to lead the world in the green transformation, or GX, in shifting the industrial social structure to be centered on clean energy. Finance is a big part of our policy package. Japan needs over 150 trillion yen or 1 trillion USD in GX investment over the next 10 years from public and private sectors combined. To realize this, we will conduct various measures to facilitate active investment by financial institutions and investors. In particular, transition finance is key to decarbonizing the real economy. It supports the transition of hard-to-abate industries that currently have limited technological and economic alternatives to reduce their emissions. The importance of transition finance was agreed upon at this year's G7, which Japan chaired. One of such measures to promote financing is this new government bond, the GX Economy Transition Bond. Japan will issue the Japan Climate Transition Bonds next February. It is the first of its kind as a sovereign transition bond. Last month, we published the framework listing the use of process. We also received two second-part opinions, each from domestic and international opinion provider, confirming its alignment with global standards. Based on this framework, we will continue work on finalizing the details. First, we will collaborate with the private financial sector to build understanding from domestic and overseas investors. We will contribute to the further promotion of transition finance by private financial sectors globally, include Asia. Climate change is an issue that cannot wait and must be addressed in cooperation globally. I will conclude my remark with the hope that the new GX Economy Transition Bond will serve as a foundation of financial activities to realize GX. Thank you.
Thank you, Mr. Yoshida. So next, I would like to move to the next part of the program, which is an introduction of Japan's policies that we've been taking so far to facilitate this initiative, which we call GX. This is a multi-ministerial effort, so we will be introducing two government speakers to introduce this policy. The first one will be Mr. KIHARA Shinichi from the Ministry of Economy, Trade and Industry. He's the Director General for International Policy and Carbon Neutrality, and he'll give a presentation to give an overview of Japan's GX policy. So, Mr. KIHARA, you have the floor.
Good afternoon, everyone. Thank you for joining us in this seminar. I am Shinichi Kihara. I'm the Director General for International Policy on Carbon Neutrality at METI. As introductory to this seminar, let me introduce to you Japan's green transformation strategy, the promotion of transition finance, and overview of the new Japan Climate Transition Bond to be issued this fiscal year. After listening to this seminar, you cannot resist to purchase our bond. Now, the path to carbon neutrality is like climbing a mountain. Yes, just as you see in this picture. We all have common goals, but there are a range of pathways or mountain trails. Some routes are linear, quick, and fast. Some are winding and challenging. The fast route represents the already green technology or projects like renewable energy. The challenging route represents the hard to abate industries that are emissions intensive and don't have technological or economic alternatives for decarbonization as of today. Carbon neutral is a whole of economic action, so top climbers alone cannot make it happen. All climbers need to keep it ascending. In order to get everybody on the path towards net zero, Japan has advocated green transformation or GX concept. Green transformation aims to achieve triple breakthrough of emission reduction, economic growth, and energy security. We will not sacrifice one for the other. Successful GX initiatives will enhance competitiveness and companies and nations. And since our carbon neutral 2050 announcement 3 years ago, Japan has released 3 major policy packages. The first was the Green Growth Strategy announced in 2020. And we established the 2 trillion yen Green Innovation Fund, and it focuses on innovation in 14 priority fields. The second was the Strategic Energy Plan in 2021, which outlines policy focusing on the energy supply side, including 2030 energy mix goal with 46% reduction in greenhouse gas emission by 2030. And thirdly, in the most latest, this February, Government of Japan announced the basic policy for green transformation, and relevant bills have passed the Diet session in May. The GX is a comprehensive whole of economy policy package that outlines the path forward in demand side, including hard to abate sectors. And among the many policies, the new pro-growth carbon pricing concept is the keyword in this GX package. So what is pro-growth carbon pricing? And we estimate over 150 trillion yen. This is 1.1 trillion US dollar equivalent of public and private GX investment is needed over the next 10 years to accelerate R&D and scaling up technology implementation. In order to mobilize such big money, the GX-based policy set out the pro-growth carbon pricing. In other words, big carrot and big stick. You can see the big carrot. It looks small, but big carrot and stick on the right. First, the big carrot comes. The government will support upfront investment by issuing GX economic transition bonds amounting 20 trillion yen or 140 billion US dollars over the next 10 years. And this is what this seminar will focus on. And I will cover this in detail later. Then the big stick comes later. Japan will introduce carbon pricing with hybrid of emission trading system starting in 2026 and GX surcharge on fossil fuel supply starting on 2028. The message from the government behind this big carrot, big stick policy is move fast and transform. Then you can receive support, become low carbon and competitive, and avoid additional burden coming later. So it is the role of government to present the overall vision and policy timelines upfront to enhance predictability and help industries build strategies and make hard decisions. In order to achieve our climate goals, we need everyone on board, including the hard-to-abate sectors. These sectors cannot decarbonize like flipping a switch overnight, but they can still commit to a credible transition plan and continuously make efforts towards their ambitious goal of net zero by fully utilizing best available technology at the time. The problems we hear from these industries are they face divestment from finance sector. They find it difficult to raise finance to implement their transition plan because it is not easy to prove that their transition plan is credible. We also hear from investors and finance sectors that it is hard for them to assess the credibility of industry's transition plans. This is why Japan is leading role in facilitating transition finance. The recognition of transition finance is rapidly spreading internationally. Since the ICMA, the first penguin, released Climate Transition Finance Handbook in 2020, TCFD, GFANZ, Net Zero Banking Alliance, CBI, OECD, and others have published documents related to transition finance. This year in the G7, under Japanese presidency, the G7 leaders communique highlighted the importance of transition finance for the first time. In Japan, METI provides 4-step policy tools on climate transition finance. Starting from the top left, first, METI published the basic guidelines for transition finance in line with the ICMA handbook. Second, METI has developed technology roadmaps for 8 sectors, including hard-to-abate industries. They are iron steel, chemical, electricity, gas, oil, cement, paper and pulp, and automobiles. Third, METI provides support for model projects. And fourth, METI released supplemental tools such as the follow-up guidance and paper on financed emission. Using these support tools, the cumulative volume of transition finance is over 1 trillion yen, or $7 billion today. It is issued by a variety of Japanese industries. From next February, as a latest effort to further promote transition finance and achieve GX, the Japanese Climate Transition Bond will be issued as the first sovereign transition bond. This is aimed to boost R&D and implementation of decarbonization technologies and call in private investment needed to fulfill the 150 trillion yen goal. Based on the GX promotion strategy, Japan Climate Transition Bond will prioritize to invest in the sectors that are difficult for the private sector alone to make investment decisions, but contribute to emission reduction while enhancing industrial competitiveness and achieving economic growth as a use of proceeds. So the examples of the areas are as follows. You can see manufacturing industry, transportation sector, CCS, carbon recycling, promotion of energy saving, renewable energy, next generation nuclear reactor, hydrogen, ammonia, electricity, and gas market. As you can see, the bond covers a wide range of scope of technologies that are needed to drive forward Japan's decarbonization on all fronts, including power, transportation, and industry sector. And we published the framework for the transition bond just about a month ago. The English version is also out, so please look into that on our website. We also received 2 second-party opinions, one from DNB and one from JCR. They both confirm the bond's alignment with global standards such as ICMA's Green Bond Principles and Climate Transition Finance Handbook. The details of the bond, such as the issuance amount and terms, will be released closely, and Mr. ARASE from Ministry of Finance will follow with a presentation after me on the nature of these bonds. And we have been communicating with investors both within Japan and out, and we aim to reach out to more and more people who are interested in our efforts. At the panel of this seminar, we will be joined with representatives from the financial industries and investors to see what their views and hopes are for this bond. Let's look forward to what they have to say. In summary, in order to accomplish our whole of economy challenge towards carbon neutrality, in addition to green projects, transition technology or activity is crucial in determining the speed and scope of energy transition. Government of Japan will facilitate transition finance as powerful tools, and Government of Japan itself will provide giant 20 trillion yen through Japan Climate Transition Bond under our GX strategy. Thank you very much.
So thank you, Mr. KIHARA, for a very informative presentation. So next, as we are issuing new bonds, I would love to introduce our next speakers from the Ministry of Finance. They will be giving a presentation on the Japan climate transition bonds and how they are positioned in the whole JGB policy. So next, I would like to ask Mr. Rui Arase, Director for Debt Management and JGB Investor Relations from the Ministry of Finance, to join us on the stage. You have the floor.
Thank you very much for introduction. I would like to make a supplementary presentation from the view of Ministry of Finance. Here are the principles of our debt management. We aim to assure smooth issuance and minimize medium to long-term costs. To achieve these objectives, we are compiling annual JGB issuance plans based on mid to long-term demands and trying to mitigate risks regarding JGB investment. This slide shows the outline of our issuance plan for related GX economy transition bonds. The table on the left shows the breakdown of JGBs by legal basis of issuance. The government will support private GX investments by issuing GX economy transition bonds. It is planned to finance 20 trillion yen over the next 10 years as investment enhancing measures to achieve green transformation and our carbon neutrality target. In the initial budget for 2023 fiscal year, it was planned to issue 0.5 trillion yen, but based on supplementary budget approved last month, the amount has been increased to 1.5 trillion yen. In addition, we are planning to issue 1.1 trillion yen as refunding bonds for GX-related expense incorporated into the second supplementary budget for the last fiscal year. Therefore, we plan to issue a total of up to 2.6 trillion yen in GX economy bonds by the end of this fiscal year. With regard to the form of issuance, we basically aim to issue them in the new form labeled bonds called Japan Climate Transition Bonds. To issue the new form, we have already received the SPO from the reviewers and published the framework on November 7th. Although we haven't decided how much bonds we will issue as Japan Climate Transition Bonds within 2.6 trillion yen by the end of next March, We will decide it and announce it by the first half of this month, with taking into account the budget execution and market environment. This is our preliminary advisory on Japan climate transition bond announced on November 8th. As described in this slide, 2 tenors of Japan climate transition bonds will be issued within the current fiscal year. All other terms, such as maturity date, interest payment dates, coupon rate ticks, and strips, will be treated as the same as other JGBs. The first issuance method will be a public auction, specifically a Dutch-style yield competitive auction. This is a list of 7 investment banks designated as the GX bond marketing supporters. We believe that IR activities are important for a successful issue. Therefore, we have selected these investment banks, which have the expertise in the ESG bond market, to support the marketing efforts, including IR arrangements at the international and domestic levels. With their assistance, we will promote investors' understandings of Japan climate transition bonds and go forward issuance plan to achieve carbon neutrality. This is the end of the presentation. Thank you very much for your attention.
Thank you very much, Mr. Arai. So next, I would like to move on to the panel discussion regarding, we will be inviting speakers from the financial sector and also issuers of transition bonds to join us to exchange their opinions and share their experiences regarding this area. So next, I would like to welcome our wonderful panelists and moderator to the stage. The moderator for this panel will be Mr. Mineto INOUE, Director for GX Finance Policy at the Ministry of Economy, Trade and Industry. Joining us in person at Dubai is Mr. Kazuyuki AIHARA, Head of the Sustainability Finance Section at Nomura Securities. Also online, we will have 2 speakers join us. So Mr. Theo Kotula is an ESG analyst at AXA IM. So hello, Theo. And we also have Ms. Isabelle Laurent, who is the head of Deputy Treasurer and Head of Funding at EBRD, and also a longstanding member of the ICMA Executive Committee. So, Mr. Inoue, you have the floor.
Thank you, Seki-san. Good afternoon, everyone. Thank you for joining us at the Japan Pavilion for this seminar on the role of sovereign bonds. Let's get started with a panel discussion for this session to discuss how labeled bonds can facilitate finance toward decarbonization, especially transition bond. I am Mineto Inoue, Director for GX Finance Policy at METI Japan. I'm happy and very much excited to moderate this exciting panel with wonderful speakers today, comprising of Isabelle from EBRD, who is the head of Deputy Treasurer and current chair of the executive committee of ICMA, and Mr. Theo from AXA, where AXA has been the front runner for the transition finance, even from the early days. The main topics of this seminar is the new Japan climate transition bond to be issued within this fiscal year, which Mr. KIHARA and Mr. ARASE presented just before this panel. For your information, we have just published English version of the JCTB framework just late last week. And this framework is the 42-page documents, which is filled with the Japanese impressive landscape like Mount Fuji or etc. And this is the SPO from DNB That is the 427 pages of documents. That is also released in the late last week. And this is the SPO from JCR. This is 42, sorry. This is 82-page documents. This was also published in late last week. You can read them if you go to the website of METI or MOF. Please download. And first, I want to start by everyone sharing their experience on dealing with the green and transition bonds so far. There are many forms of allocating finance toward decarbonization. One of such forms will be the issuance of labeled bonds. Many corporates have taken this action, and to ensure their credibility, the ICMA, of which Isabelle is a key member of, has formed handbooks and guidelines which are now the global standard of these ESG bonds. Along with the issuance of these bonds by corporates, governments, and other public bodies have issued labeled bonds. EBRD is a trendsetter for issuing its green transition bond, even ahead of ICMA guidelines being formed. I'd like to have Isabelle speak later about how EBRD made that decision and how their experience has been so far. Many governments around the world, such as the EU, Germany, France, UK, Canada, Singapore, so on and so forth, have issued the labeled bonds as a green bonds to allocate funds toward the decarbonization. Japan is now, trying to issue the bond labeled as a transition bond. I'd like to turn to AIHARA and Theo later to hear how they perceive the issuance of these government bonds. As a background, please let me explain why we want to, call the new bond as a Japan Climate Transition Bond. As introduced by Mr. KIHARA, Japan has been closely watching these global developments in considering our GX policy package. To achieve our goal of reaching carbon neutrality by 2050 and reducing GHG by 46% by 2030 compared with 2013, we need to allocate a vast amount of finance for the R&D and the implementation of various technologies that can contribute. Looking at the main CO2 emitters, we recognize that the hard-to-abate industries, such as steel, chemicals, and cements, account for a large amount of our emissions. These hard-to-abate sectors cannot bring down their emission to zero overnight. Because the clean technology requires further information or still is expensive, also these carbon-intensive sectors often face a divestment from the finance sectors. Because financing such sector will spoil the portfolio of the investor or banks. This is a reason why, because government of Japan has been promoting the effort on transition finance, of which the most recent development is choosing to issue the world first sovereign transition bond to realize green transformation. With such scene setting, let's move to discussion. First, I'd like to ask each panelist about what their past experience and assessment of the current state on the transition toward carbon neutrality that yourselves are working on generally. Second one, what do you think are the challenges for the wider use of climate transition finance? Isabelle-san, can you go first as a first penguin?
Thank you very much, and thank you for inviting me to participate in your panel and seminar. So we, like you, took the decision that it was going to be important not just to focus on the near zero or net zero assets in order to achieve transition and Paris alignment, and that we would also need to focus on the hard to abate sector. And we've been issuing green bonds consistent with the green bond principles since 2010. actually before the green bond principles were first properly formulated, but absolutely consistent and aligned with the overall strategy that was then articulated. And we had, in so doing, focused mostly on energy efficiency and on renewable energy in various sectors. But we noted that by 2019, most of the green bond issuance that was being undertaken was being done in those very particular sectors and not in the hard to abate sector. And as illustrated very well in that mountain pathway and the need to make sure everybody gets to the top and not just the few, we wanted to highlight the importance of this sector. Now, it's quite difficult because it's very easy when there aren't perfect technologies to get us to near zero or net zero in certain sectors, to use greenwashing as an accusation that can be leveled against things that cannot be perfectly aligned. But as we note, the International Energy Association says that approximately 50% of CO2 emissions cannot be reduced by existing technologies right now. So what we needed to do was to highlight the importance of seeing transition and making sure that we were not creating lock-in, that we were able to look at things that made a substantial difference right now, that used best available technologies, even if we didn't have this clear path to transition at this point. And that was something that I think we see again reflected very much in the GX strategy that you're articulating. And we need to be able to focus on all these different sectors. And I noted that your 8 specific technology roadmaps that you've focused on are pretty much the ones that we were focused on, but that in the translated strategy, you have also highlighted the importance of decarbonizing the agricultural sector. And that's something also that we had focused on. So I think that this is an important milestone to continue to focus the market and scale up investments for the hard to abate sectors, because without that, I see little possibility that we will achieve our overall goals as a market in supporting decarbonization. And so we've continued to issue green transition bonds. We found that investors do understand that we can't just focus on the near zero and net zero. And we're very supportive of this move. So I will finish there and hand back to you.
Thank you. Thank you, Isabelle-san. Yeah, thank you for your comments on the basics of transition finance, like no lock-in or best available technology. And also thank you for referring to the 8 sectoral roadmap and EBRD's strategy to also look at the agricultural sector. Thank you. And I think that the EBRD is one of our teachers for tackling the transition finance. Thank you very much. And next, I'd like to turn to AIHARA-san and then Theo. Please go ahead.
Thank you, Inoue-san. I'm pleased to join to discuss this hot topic with wonderful members who have the wealth of knowledge. And I'm Kazuyuki AIHARA at Nomura Securities. And I have been in this sustainable finance space since 2017. And I can see the remarkable progress in Japanese sustainable finance market. In 2016, the first green bond issued by the Japanese private issuers is done by the Nomura Research Institute. That is the group company of Nomura. And at that time, the amount of the deal size is $60 million US. But in this year, in this fiscal year, the amount of the sustainable finance reached to the $51 billion worth. This year's issuance is much higher than last year's. In the first half of this fiscal year, the sustainable bond reached to the 80% of private and agency bonds issued. We believe this is due to the fact that many issuers have participated in sustainable finance market, and some have been engaged in the large-scale procurement. Of course, the fact that so many investors have participated in this market is also a big factor. Japanese companies are committed to contributing to the decarbonization and the social as part of their companies' creed, including their efforts to address the SDGs. They also see decarbonization as a catalyst for new growth. Nomura has been supporting our clients and contributing to expand sustainable finance markets. Nomura has set a goal to engaging in sustainable finance of $125 billion over the 5 years. That is a start from the fiscal year 2022. And we have successfully met the target for each year. The amount of the transition bond has been increasing as well, and expected to act an important role to expedite the decarbonization of the Japanese economy. Thanks to investors' support, as with green bonds, Japan's transition bond issuance has reached close to the 700 billion yen. About 80% of transition bonds are issued by energy-related companies. It's like electric power companies and oil, gas companies and oil-related companies, indicating that transition finance is helping these companies raise the funds needed to pass carbon neutrality by 2050. The use of transition finance by the energy industry is very important, but it is hoped that it will be used even more by manufacturing industries, which must achieve carbon neutral to reduce greenhouse gases. Nomura held a roundtable event to discuss transition finance this year with market participants. I would like to show their opinion. I would like to, from the issuer's opinion, they require deeper investor understanding of issuers' management policies, initiatives, and businesses, as well as the medium to long-term strategies of companies needing to engage in energy transition. And one more, promotion of understanding for each initiative and national market authority to improve the international status of transition financing, taking into account the characteristics of industries and regions in Japan. On the other hand, investors requested that providing a quantitative roadmap on which to demonstrate the CO2 reduction benefits of their portfolio. And one more, with the prospect of reducing CO2 emission uncertain, it is hard to invest without consideration. We can understand that transition finance requires more communication between issuers and investors to obtain a framework and disclosure of a decarbonization strategy acceptable to the both parties. Both parties expect that the new Japan Climate Transition Bond will become a good example of the level of disclosure at which transition finance gains market understanding. Upfront investment by the proceeds of Japan climate transition bonds is expected to stimulate the use of transition finance by corporate issuers, as it will stimulate investment and financing about 150 trillion needed over the next 10 years. Nomura will support investors' understanding of transition finance and their investment decisions through the provision of information and cooperate to ensure that Japan's efforts are acceptable overseas. As transition finance, it is possible to consider not only loans and bonds market, bond issues, but also increasing financial strength by combining equity finance. In hard-to-abate sectors, it is expected that innovation technologies for decarbonization will generate only a modest cash flows until over a long period from the development stage to implementation stage. While debt financing has been largely utilized under the low interest circumstances, attention should be paid to the various financing that utilizes capital markets more broadly. Thank you.
Thank you, AIHARA-san. Theo-san, please go ahead.
Yes. Well, good afternoon, everyone, and thanks for joining this panel. First of all, I would like to thank the Japanese government for inviting me, even though I couldn't be there in person, but I'm very happy to be part of this discussion. So I'm Theo Kotula. I'm an ESG analyst here at AXA Investment Managers. And for the past 5 to 6 years, I've been closely following the labeled bond markets. So green, social, sustainability at the beginning, and more recently, sustainability linked and transition. So all of these are of interest for us. A few words on the way AXA IM is approaching a transition. So we have a net zero commitment by 2050 or sooner across all of our investments, all asset classes. And as part of that, we also have intermediary targets where we want to reduce the carbon intensity of our investments by 2025. And now maybe more closer to the topic of today's discussion, we have been an early caller for transition bonds. Back in 2019, we published a kind of white paper detailing our views on transition finance and our call for transition bonds as a tool to help financing the transition. I think this came from various points, and that will echo what Isabelle mentioned, that we were already quite heavily invested in green bonds, and green bonds are great if you want to, as an investor, to finance zero or near zero emissions projects and assets. But if you look at transition financing, which is a much broader issue and challenge, you can't only rely on green bonds to achieve your objectives. And we also wanted to keep the integrity, quality, and credibility of the green bond market. So, because the conclusion we had is pretty clear. And if you look at various figures here and there, it is estimated that we will need annually $3.5 trillion of capital investments to achieve a net zero economy. And of course, green bonds alone cannot help achieving that. And I think as a responsible investor, we've been looking for ways to close that gap and address energy transition and transition as a whole through various instruments and strategies. Still on a bit of figures. Currently, we have around $25 billion invested in green bonds. But once again, transition financing is a broader topic, and it is now incorporated as a global objective in our entire fixed income and equity investment strategies. To illustrate that, we have in place a systematic internal methodology to assess issuers, both from corporates and sovereign side, to assess their transition strategies. And basically, we rank them according to the robustness and credibility of their net zero commitments and action plans. And that impacts investment decisions. We also believe that the label bond markets have a major role to play here in financing the transition. And I guess one of the keywords we want to emphasize is that green, transition, sustainability linked are complementary tools. So AXA IM is supportive of all these labels, as we really believe this all will be needed to deal with the broad challenges of transition financing. Our main point on that is that we want these labels to be structured in a robust manner with credibility and quality. And that's why here again, we try to systematically assess label bonds to ensure they will actually deliver on transition challenges. Just to conclude around the challenges we see forward-looking around transition bonds and transition financing as a whole. First, I think at issuer level, the market needs a common, well-accepted definition of what is a robust transition strategy and action plan. And that, as an investor, you can look at very different tools and methodologies today to try to assess the credibility of transition strategies. And sometimes it makes it quite difficult to ensure you're looking and using the correct data. Second main challenges is around more at the asset and project level. Here again, a more robust definition of what is a transition asset or project. I think on that, we are pretty clear on what a good quality green project is. We've got guidelines from the ICMA, we've got the EU taxonomy here in Europe, but other taxonomies around the world, which are super helpful. But on transition, here again, a broader challenge. And I think that's probably where the market and market players have to focus and collaborate more. Thanks.
Thank you very much, Theo-san. I think that the both of you, AIHARA-san and Theo-san, has touched upon the importance of transition finance. In that, green finance itself cannot meet the goal of decarbonization, so that the transition finance, the role is really important. And also, I agree with AIHARA-san that the communication, even after the execution, is really important. And also agree with Theo in that the strategies or plans, robustness is important and also challenging. So next, let's move on to put a little more focus on the new Japan climate transition bonds. So first, let me turn to AIHARA-san as one of the main security firms in Japan. How are you perceiving this new Japan climate transition bonds? Do you think it will contribute to the expansion of the sustainable bond market in Japan?
Hi. It is understood by the market participants. Japan climate transition bond will play a major role to drive the Japan green transformation strategy, not only in raising funds to balance economic growth and decarbonization, but also in promoting private investment by being used in areas where investments is difficult as a private company. As a roundtable event, as I mentioned, many participants cited Japan Climate Transition Fund, Transition Bond as a topic of interest. It is hoped that the issuance of Japan Climate Transition Bond will encourage decarbonization investment by the hard-to-abate sector, thereby facilitating transition financing by private companies. Transition bonds are currently issued in limited areas, such as Japan. and it is necessary to gain credibility in international markets in order to encourage private companies to enter. The revision of the ICMA Climate Transition Finance Handbook has improved understanding of transition finance, but it is hoped that the Japan Climate Transition Bond will encourage market participants to accept transition finance. Transition finance expected to expand its size in the market, but it is also expected to expand product lineup. In addition to loan and bond issues, capital enhancing can be used as transition finance in our idea. I believe it is necessary to broaden understanding of transition, and we will support many investors to participate in climate transition bonds. But how to expand understanding and how to increase market credibility of transition finance? One of the solutions is engagement between issuer and investors. The purpose of engagement is to check the progress of projects and to share the future progress among the parties. Engagement is expected to realize implementation of transition strategies after financing about contribution to the improvement of corporate value. We should recognize that post-issuance follow-up is important in transition financing. That is the same as Theo said. Transition financing follow-up guidance was released last June, as the guideline for fund provider to have better conversation with fundraiser. But the follow-up guidance will be very useful both for issuers as a guide for post-issuance disclosures and conversations with investors. In terms of the transition finance, underwriters are required to act as a market intermediary to facilitate dialogue between issuers and investors, not only at the time of issuance, but also after issuance. And I'd like to mention the decarbonization at the civilization life level, but it's a very personal thing. Can I mention that at this stage? It's okay, Isabelle-san and Theo-san? Yeah, I put a solar panel on the roof of my house. I'm planning to connect my electric vehicle and the solar panel. But the equipment for connecting with them, that is called a vehicle to home equipment. That is very scarce. I ordered that last May, but I haven't gotten that, not yet. I asked METI to strengthen their support to the industries which produce vehicle to home equipment to improve the Japanese civil level decarbonization. Thank you.
Thank you, AIHARA-san. Yeah, I was impressed by your story on the personal implementation case of the solar panel. We need to further promote such kind of activity in a real world from now on.
Thank you very much, Inoue-san. That is an ekojiman in Japanese. Thank you.
Thank you. And also you touched on the equity side for the transition finance application. And now I agree in that the follow-up, again, communication in essence is important. Thank you very much. Next, let me turn to Theo. What are your hopes and expectations for this new bond? How do you see its characteristics as a sovereign transition bond?
Sure. Well, first, I think some of our hopes and expectations regarding label bonds have already been met with the Japanese government. First on this idea that climate transition or transition bonds should be used as a complement to the existing green and SLB markets. We really believe this should become a very relevant instrument to help financing the transition to low carbon economy. Also, I think engagement between investors, issuers, and underwriters as well has been mentioned. But really, that's where our hopes have been met as well, because we had extensive discussions with METI and other Japanese ministries, and we really appreciated them to take the time to first explain us how this transition finance framework will work, and to gather our feedbacks and expectations as investors. And I think the aim of that has really been to structure this GX transition bond in a very robust manner. So that's for the good thing we've seen so far. And on our future hopes, we really hope that this will pave the way for other issuers in Japan, outside Japan, corporate, sovereigns, and also help the entire market to refine the concept of transition finance and how transition bonds can help. Once again, key word for us is complementarity. And you know, we as part of our net zero commitment, we invest in high quality green bonds if we want zero or near zero green assets. We invest in SLBs, ambitious SLBs with issuers for which it's sometimes complicated to identify green or transition assets, but that still want to establish a strong link between their financing needs and their transition strategies. And lastly, the main topic today, transition bonds for issuers like Japan, where this is probably the better option given their constraints and the way they can look at financial markets to achieve the transition. I think one of our hope as well is really to help maintaining the quality and credibility of the green bond market. I think we've been very concerned with potential greenwashing issues, and we don't want to push the boundaries of green too far. And that's where also Japan has been very clear and transparent on the fact that while some of the categories under the framework could be considered as green, there are maybe the majority that is not green enough yet, and that's where there's a transition label needed. So that's basically our main hope and expectations. We really hope that will pave the way for future developments in the transition bond markets.
Thank you, Theo-san. Also, thank you for touching upon the story of discussion between METI and AXA IM. I think that the discussion was held at the first time more than 2 years ago, and the time flies. You know, after that we issued a you know, transition finance guidance in Japan, and issued a eight sector roadmap, and then the Japanese government is now trying to issue the you know, JCTB. The time flies. You know, and you know, thank you for touching on the you know, potential that the JCTB is going to provide a, you know, concrete example for other countries to follow. We will try our best to meet that kind of expectation from the investors. Thank you. And then let me ask Isabelle-san, how do you see the features of the Japan Climate Transition Bond?
So thank you very much. And I've certainly agreed with the last two speakers in most things. I think one thing that I would like to emphasize is that for EBRD and to a large extent the Green Bond principles and the executive committee have concluded that any bond issue that is consistent and aligned with the Green Bond principles is a green bond. and where it's dealing with the hard-to-abate sector and is consistent with the Climate Transition Finance Handbook recommendations and the 4 key elements of the Climate Transition Finance Handbook, it's a credible climate transition bond. So under the green bond principles aligned with green. So we see this as part of a continuum, and that a transition bond that isn't focused on Paris alignment is not really a sort of transition that we would agree with. So I think what is very encouraging about the framework is that it is focused on short, medium-term, and long-term targets. It is really articulating the strategy across the different periods, including for the parts of the economy that at the moment we can't see the technology for, but that efforts will be made through research and development to achieve that. I think that the aspect that I also welcomed was the incorporation of and the importance placed on mitigating negative impacts, including a focus on just transition strategy and avoidance of lock-in. And I thought it was very welcome to see in the basic policy of the realization of GX that you put out this year, that this mitigation of negative impacts are actually underlined in that basic policy. And I think it's a very important part, because in having a strategy that includes things like gas and ammonia, we need to make sure that there is a focus on mitigating risks such as methane leakage and other aspects. So I think that it's very welcome that you are focused on the overarching strategy and the explicit alignment both with the Green Bond Principles and the Climate Transition Finance Handbook. So thank you very much.
Thank you, Isabelle-san. Yeah, of course, SPOs like this say that the JCTB framework is in line with the Green Bond Principles and CTFH. And also, thank you for touching on the reporting. And of course, JCTB incorporates a reporting provision, including some example of the impact reporting, like CO2 emission reduction potential. We will fine-tune the reporting format after issuance with the dialogue with the stakeholders. Thank you. And while we still haven't yet issued the bond, I believe the biggest question people will be asking, what's next? Let me first ask AIHARA-san, what are further measures needed to ensure the success of JCTB? What will be the learning points for wider Asian financial market?
Thank you, Inoue-san. The development of sustainable finance is based on the credibility, on the market confidence that will contribute positively to environment and society. Reporting for the fund allocation and environment or social impact is an important factor to maintain its credibility. That is, and many people mentioned that. In the framework of Japan Climate Transition Bond, there is a reporting section which states that the funding status and environmental impact will be published on the government website. Designing a website so that it is easy to keep track of project progress is one way to improve investors' understanding and reliability as a transition bond. It is understood that follow-up guidance also requires confirmation on the status of efforts for the project and provision of information on future prospects. Japan Climate Transition Bonds needs to be a good example for Asian countries that want to decarbonize. To achieve a new carbon neutrality, it will be essential to pursue electrification and the fossilization of power sources. In addition, emissions from processes that are difficult to electrify, such as high temperature industrial processes, raw material demand in industry, and transportation sector must be reduced. This is a challenge throughout Asia, which account for the big chunk of global emissions. It is necessary to promote transition finance, both in Japan and overseas, especially Asia, to accelerate decarbonization both through ready applications that reduce emissions at scale and emission reductions over the longer term through in development of new technologies. To expand transition finance as credible sustainable finance, engagement between issuer and investor will be required with sufficient post-issuance information. Nomura participated as a lead sponsor in the annual meeting of ICMA principles held in Singapore last June. At this conference, where transition finance was one of the major topics, the METI also made a presentation on Japan's green transformation strategy. In the presentation, it was introduced that transition finance was mentioned in the joint declaration at the G7 Hiroshima summit. And other efforts are being made to promote understanding of overseas markets. According to the sixth assessment of the IPCC, the reduction of the greenhouse gas emission by 6% in 2035 compared to 2019 is necessary to achieve the Paris Agreement target of limiting the temperature rise to within 1.5 degrees since the pre-industrial era. The increase in temperature compared to pre-industrial era has already reached 1.1 degrees. And global emissions in 2030 are likely to exceed 1.5 degrees during the 21st century, making it even more difficult to keep warming below 2 degrees Celsius. The decarbonization of industries throughout Asia, including Japan, is urgently needed. I believe it is important to raise awareness at home and abroad, just that Japan climate transition funds an effective financing tool for decarbonization by successfully issuing them and establishing them in the market. Thank you.
Thank you, AIHARA-san. Next, let me turn to Isabelle. What are future prospects on your front as a EBRD or as a member of ICMA to facilitate more funds toward transition and expand the market for climate finance? How do you see the issuance of this new sovereign bond contributing to the global development? A little bit quick, please.
Yes, absolutely. Well, EBRD has been focused on the green economy transition, and we put out a strategy in 2016, which we recently re-emphasized with what we call GET 2.1, where we intend for over 50% of our annual business investment to be focused on the green economy transition by 2025. And we will continue to focus on that, and it includes Paris alignment, the focus on no lock-in, so many of the different aspects that you yourselves are focused on with the GX strategy. And I think with the publication of the renewed Climate Transition Finance Handbook, the Green Bond principles will continue to focus, and the also for sustainability-linked bonds as well, to focus on what we can do to highlight the importance of transition with the sort of credible strategies and enhanced education and a focus on science-based targets and the other things that will underpin the credibility of actions to be taken. So thank you very much.
Thank you, Isabelle-san. Next, let me turn to Theo. From the perspectives of a European asset manager, what is needed further to promote the transition finance and the role of government or sovereign bonds? Theo-san, please, a little bit quick, please.
Sure. I'll try to be as quick as possible. First, I would come back on my previous point around improved definitions for transition finance and transition assets. That's really where there's a need for all market players to have a better sense of what transition finance means. Once again, our discussions with METI and the Japanese government have been super helpful from this perspective to really understand Japanese specific needs around transition and coming back to this sectorial roadmap to really get a deep sense of what is needed for each sector individually. I think at some point with transition finance, which is complicated, you need to get a bit technical sometimes and to dig into complex issues. So we really hope that this Japanese transition bond will be well received by the market participants and will help everyone getting a better sense. And I think we really need concrete examples like Japan and EBRD to see what concretely a transition bond and transition finance means. And I think at the end, our focus is not really about should that be green, should that be SLB, should that be transition? It's really about is this issuer's transition strategy credible and robust, and how this bond, whether it's green, transition, or SLB, is actually helping in delivering on these objectives. And to finish specifically, I think on sovereigns, there's first a role to lead by example and pave the way for transition finance and transition bonds. I think Japan is bringing a huge amount of money into transition finance with that bond and that framework, and we hope that will help regarding the scalability of the transition finance concept. And second, I think it was mentioned also by other panelists, sovereign have a role to play in reducing uncertainties, notably from a technological or economical feasibility of some of the technologies that will be needed to achieve transition. I think CCS is a good example here. We know that will be needed in some sectors like cement, for example, but maybe as of today, it's not really viable from an economic equation standpoint. And we think that's where governments can help with R&D, with incentives for the private sector. So once again, we hope that will pave the way for future good quality developments on that front.
Thank you all for your input. Wrapping up, I believe we can say that there are extremely high hopes and expectation for this new JCT, Japan Climate Transition Bonds. There are so many things at stake, and today's discussion really made me realize that all eyes are on us. I believe that the discussion today have brought us one step, maybe even multiple steps closer to achieving our goal of net zero. Once again, I'd like to thank the wonderful panelists here and all participants who contributed to the intensive discussion toward the vitalization of this climate finance market. We hope to keep in touch. Thank you very much.